Good morning, everybody. Hey, welcome to Tuesday. It's hard to believe, July 14th. Tomorrow is tax deadline day. Kind of a weird thing to say, but it is tax deadline day tomorrow. I hope you got yours done. As as we kind of look at what happened yesterday, it was a crazy day, and I know Dave and I will talk about that because it was all over the place. It made for some interesting watching throughout the day. I hope you got to catch some of it. And Dave and I will bring you up to speed today as we get ready to talk about what's going to happen today as the financials start to report. Glad you joined us today. Hang tight for Dave to join us.
FM, that's always early morning, Dave. We're at 8:38 now. Something Phillip, Statler, and I have both been saying for a long time. You never know what's going to trigger a big change real fast. If you were feeling like flying high on tech stocks, you kind of looked at yesterday and probably wanted to toss cookies by the time the day was over. Let's see what Wall Street looks like today. Downtown Sebring, we go to the offices of Statler Financial Services. Phillip Statler is on the line. And doggies, did NASDAQ go to heck in a handbasket in a hurry yesterday, didn't it, Phillip?
It did. All the indexes had a roller coaster day, at least started up and then fell very quickly the rest of the day. I mean, for the NASDAQ to start, I think if I remember right, it was going to be up about 100 points as it opened up, ended up down over minus 200 points yesterday. That's a big swing. Obviously, I think some profit taking probably came in on that one, Dave, because the NASDAQ had hit so many record highs over the last previous so many sessions. I think that was probably profit taking. Not sure what happened on the Dow and the S&P though. The Dow was the only one that managed to close in positive territory, and that wasn't much. I think it was up $10.50. So one of those days.
$10.50 barely qualifies as positive, but it's nice to see at least one green color. Yeah, about midday yesterday, we got word that California was going to shut down. That probably made a difference. Gavin Newsom, the governor out there, decided to shut the restaurants back down and kind of go back to their phase one. And I would imagine all the high-flying tech stock CEOs said, oh, my God, no more avocado toast for a while. So that probably accelerated it. Yesterday as well, overnight, Great Britain decided to pull back and tell Huawei, the big Chinese tech manufacturer, they weren't welcome to help build Britain's new 5G system. So that got some tech and trade tensions off of the price of one. And you put it all together, it just wasn't a pretty day starting about midday on Wall Street, was it?
No, it really wasn't. It was, I looked at it up until about lunchtime, and it looked like it looked like a great day. And then, man, did it start falling, and it fell relatively quickly.
And it kind of gets into that cautionary tale that you've been saying a lot. You don't know what's going to prompt a sell-off, and yesterday was probably one of those. NASDAQ was the poster child. Everybody was down, but a lot of profit-taking took place, and it was triggered by just a kind of bring them all back to ground. If the biggest state in the nation can say, whoa, let's cut back on that opening process and back up a couple of stages, it can happen in other states as well, and that makes investors real jittery.
Yeah, it does. As the numbers continue to rise, it gives us concern that more states could do the same thing as California, and that would mean that the economy wouldn't be going forward; it would be still going backwards again.
And that's obviously the direction we don't want it to go. Start the morning out with a few economic tidbits. One of them was the government releasing the Consumer Price Index, showed inflation to the consumer last month up by 0.6%, which my initial reaction from the vantage point of an economist says, well, that means the consumer demand is up. It's still driving prices up at a relatively healthy rate, but it wasn't what Wall Street wanted to see, I gather.
No, it really wasn't, Dave. That was about 0.1% more than expected on both the core and the full out CPI. And when that happened, we saw a big turn in the futures because the futures were up over 100 points on the Dow. They're down below 10 right now.
Holy crud. That's for only 0.1%. It's not even that big a miss if you were disappointed by it.
Yeah, you're right. It wasn't, but evidently maybe it's not just that they're looking at. Maybe California is starting to weigh in a little bit more than we anticipate.
I got to believe that's got to have a weight on the thing. Like I said, it's the most populated state in the country. When they do something, it kind of affects the rest of the country, even if a domino effect doesn't take place. But 0.6% inflation, like I said, that indicates at the very least the existence of consumer demand, and I would think that would be good news. The other thing going in there affecting the number 2 state in the country, Texas. Well, doggone. OPEC puts out their projection for future oil demand, and that's pretty greasy, so that didn't help energy stocks a bit.
No, and it's not helping oil either. So across the board, those things will continue to hurt. We really do want oil up over 40 to 45 45 would be really nice. But we're just having a hard time getting there and staying there. And these other countries aren't helping us any.
And not one tiny bit. Even when they aren't changing their pumpage rate, they're putting out reports that don't help us a bit. I'm looking at the crude oil futures, and they're back down under 40 today, which is something we hadn't seen a lot for the last couple of weeks. Top it off with the economic numbers we've got. Earnings season begins today, and that's kind of high holy day in the finance industry. We start out with the banks, and what I'm seeing in terms of an overall picture, they're all losing their shirt, but for the most part, the reports we got this morning, at least 2 out of 3 were doing better than the analysts expected.
Well, they're making money. Don't say they're losing money. They're making, like J.P. Morgan. They made $1.38 a share, which was better than expected. They expected to make just a little over $1. Now their profits are down 50% from where they were a year ago, and they've had to increase their loan loss reserves significantly, like over $10 billion. So if we look at J.P. Morgan, they're still getting a nice little bump this morning. They were up 1.4% yesterday. They're up another 1.4% this morning before we get opened up. Then we had Citibank. Let's kind of look at the winners first. Citibank came in and they beat pretty big too. They came in at 50 cents a share. They were expected to come in at 28 cents a share. Their revenue was better than expected. So they really they had a pretty good quarter also. They were positive a little while ago. They have gone negative right now. They're down about 1% before we get started.
I was going to say the year over year on Citibank was almost scary. Their profits down by 73% year over year. So, no, losing their shirt probably wasn't the right term to go in, but boy, what a change from last year, even if it is better than the analysts expected.
Exactly. But now we look at Wells Fargo. Now that's a different story, because Wells Fargo did lose money. They lost 60 cents a share. They were expected to lose 20 cents a share. So that's a pretty big miss. Their revenue was off by about $500 million. So, and then to top it off, they reduced their dividend down to 10 cents a share. So they have all kinds of issues that the consumer investor is not liking what they see when it comes to Wells Fargo. They're down 4.5% this morning before we get going.
Looks to me like they're one of the ones that are leading the market down. I get the delayed quote, and I was showing 1% better than that, but they're still toward the top of my big loser list this morning.
And they're getting close to their 52-week low. Their 52-week low is $22 a share, and they're right now, if it opened right now, it'd be at $24.26.
Lordy. It sounds to me like even with the restrictions on how many assets they can hold, they haven't been doing the right things with them based on the economy, right?
Yeah, it sounds like some expenses probably need to be cut somewhere in there. So that's the banking industry, right? So we did have one of the travel companies come out. We had Delta airline company come out. They lost $4.43 a share. That's a pretty big loss, and it was more than expected. They expected to lose a little over $4 a share. So revenue, though, was a little bit better than what everybody had forecasted. Obviously, they're still seeing a lot of uncertainty from COVID-19. They're trading down a little over 1% this morning.
Yeah, they lost $2.8 billion and announced a whole bunch of flight cuts back at the same time. So Meter just said he got a flight up to Michigan to visit his family in August. I hope it wasn't on Delta. I'm not sure the flight's going to continue.
Well, you have them. You have American Airlines coming out and warning, like Delta did not too long ago, that hey, or United did not too long ago, is that they're warning their pilots that they may begin potential furloughs.
Yeah, it's not a pretty sight this morning, and we're going to cross our fingers that a few more good reports out of the financial industry help us a bit. Resetting the table for the morning, it was a negative day on the NASDAQ and the S&P after what looked like it was going to be a real positive start yesterday. Dow basically flat, up 10 in the context of a 26,000 Dow is pretty close to flat yesterday. All of those indexes making big U-turns in the middle of the day. 45 minutes before we open this morning, Phillip, can we keep any green ink on the books? I know you've been saying we're trending downward.
Well, we are. We did trend down. We were pretty much a red across the board. We are getting a little bit of a mixture now, and it's pretty volatile. It changes by the ticker second. We do have the Dow up right now about 0.2%. Right now, the S&P 500 is basically flat, and the NASDAQ's down 0.1%. So more red than green this morning as we get ready to open up. On the commodity side, we've got silver giving back quite a bit this morning. They're down 1.25%, and gold is down 0.33%. As we said earlier, Dave, crude oil is down 1.8% to $39.36 a barrel.
All right. I can't do any better with overseas markets. When we take a U-turn like that in the middle of the day, you can count on the Asian Rim following suit. And yeah, both Japan, Hong Kong, and the mainland China markets were all off. England and Germany are both kind of trading off by a little midway through their trading day. Great Britain's only 0.33% down. Germany's a little over 1% off. This is kind of the poster child time for why stability counts in one's retirement fund, Phillip. If they were following NASDAQ, at the outset I said, boy, after yesterday, you might want to toss cookies. It's time to stabilize my retirement. How do I find you to get that advice?
Then give us a call at 863-382-0037. Now's a great time while the markets are back up there to make some adjustments to your portfolio, get a second set of eyes, taking a look to see how much risk that you're sitting on. And then follow us on Facebook. All you have to do is punch in Statler Financial Services. We'll come right up, like and follow our page there where we repost these every day. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m.
And we stream it, too, at newstalk730am.com, just like we do this one at 1057lightfm.com. Phillip, we'll see you tomorrow morning. I appreciate it.
All right, buddy. You have a great day.
Take care, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, let me say thank you again for joining us, watching our show. Hey, like our page. Let your friends and family know that we're out here every day. Hey, we've got some things on the horizon that we're working towards, and we'll announce those in the coming week probably of what those will be. Thanks for joining me. I hope that you have a great day, and I look forward to speaking to you again tomorrow.